BlockFire's Simon Dedek believes the next bull run will send Bitcoin to an all-time high of $150,000 and Ethereum to an insane 9K. But is such a large parabolic move for Ethereum even possible? And more importantly, can you still become a millionaire by investing in Ethereum alone? Find out today. Let's get it. What if I told you could buy one token and make daily passive income from multiple dApps and crypto platforms? And what if that token only had a 20,000 max supply ever? I bet you'd buy it. I know I did. Check out powermind.club and tell them BitBoy sent you. Welcome to BitBoyCrypto. If you would like daily crypto videos, make sure to hit the subscribe button. If you want to learn more about crypto or trading, then please make sure to join one or both of my Telegram chats, the Bit Squad or Bit Squad Traders. All right, guys, today we are going to dig deep into Ethereum, DeFi, and whether or not Ethereum is the best investment of 2020. And we're also going to answer the age-old question, well, at least since 2014, could Ethereum still make you a millionaire? It happened to plenty of people in 2017, but can lightning strike twice? Ethereum is one of the most well-established and known brands in the crypto space, besides, of course, Bitcoin. But is the opportunity to make money on ETH gone? I believe the answer is absolutely not. Ethereum has been called the digital programmable dollar, and many projects have been using it as such. Decentralized finance, or DeFi, is one of the things in crypto that will change our world, and getting in on Ethereum now could be a solid retirement plan. So let's start with defining what DeFi is. It's more than just a buzzword. Put simply, DeFi leverages decentralized networks to transform old financial products into trustless and transparent protocols that run without intermediaries or middlemen. Of course, we don't know how high Ethereum will surge during the next bull run, but we do know that it has potential to do so based on DeFi alone. DeFi consists of various industries being tokenized on Ethereum's blockchain. A few of those things are trading, lending, investing, wealth management, payments, and insurance, and it's all done on the blockchain for many reasons. Coinbase refers to DeFi as open finance, accessible to anyone in the world with a smartphone and internet connection. DeFi is based on decentralized applications, also known as dApps or protocols. By running these dApps on a blockchain, it provides a peer-to-peer financial network. Like Lego building blocks, every dApp can be combined with each other. Smart contracts work as connectors, comparable with perfectly specified APIs in traditional systems. Smart contracts are programs running on the blockchain that can execute automatically when certain conditions are met. These conditions are coded into the contract. Smart contracts enable developers to build far more sophisticated functionality than simply sending and receiving cryptocurrency. This is what separates Ethereum from Bitcoin. These programs are what we now call decentralized apps or dApps. Today, nearly all DeFi projects are being built on Ethereum, making it the standard default blockchain for many dApps. According to DeFi Prime, there are over 200 DeFi projects built on Ethereum alone. DeFi projects now account for a substantial share of Ethereum's sprawling ecosystem, particularly with respect to ETH locked in smart contracts, which is often used as a measure for growth for the DeFi sector. The amount of ETH locked down is collectively worth over $600 million, according to DeFi Pulse. In terms of volume of locked value, MakerDAO dominates across the major applications, with Synthetics, Compound, InstaDApp, Uniswap, and DYDX following behind. So what are the benefits of using DeFi? DeFi is built on top of a blockchain. Often the blockchain is referred to as a general infrastructure layer. DeFi can be viewed as a cluster of second-layer applications. This allows DeFi to inherit the core property of decentralization. It's important to note that this only holds, of course, if the blockchain itself is decentralized. Fulfilling this precondition, the core benefits of open finance are shared with the core benefits of blockchain, including true decentralization, which allows censorship resistance, worldwide participation regardless of social status, and it dispenses trusted third parties. Utilizing blockchain as technological infrastructures allows relatively speedy and low-cost transaction settlement, immutability of financial contracts, and contract automation. DeFi applications generally allow that the user remains in possession of the private key. This is referred to as non-custodial in the blockchain ecosystem. The user is in full control of the money without a trusted third party. Increased ecosystem transparency and thus price and market efficiency. Everything in DeFi moves faster because there is no need for confirmation of a third party on price or contractual agreements. DeFi favors network effects, as a lot of innovation is generated by uniquely combining multiple projects in Layer 2 or even Layer 3 applications. Okay, so what differentiates these DeFi dApps from their traditional bank or Wall Street counterparts? At their core, the operations of these businesses are not managed by institutions and their employees. Instead, the rules are written into the code of the smart contracts we discussed earlier. Once a smart contract is deployed to the blockchain, DeFi dApps can run themselves with little to no human intervention. But in reality, though, developers must maintain the dApps with upgrades or bug fixes, so not completely decentralized, but you get the point. The code is transparent on the blockchain for anyone to audit. This builds a different kind of trust with users because anyone has the opportunity to understand the contract's functionality or even to find bugs. All transaction activity is also public for anyone to view. While this may raise privacy questions, transactions are basically anonymous by default, i.e. not tied directly to your real-life identity. It's been global since day one. Anyone, anywhere with an internet connection and a mobile phone can use DeFi. It's permissionless to create, permissionless to participate. Anyone can create DeFi apps, and anyone can use them. Unlike finance today, there are no gatekeepers or accounts with lengthy forms. Users interact directly with the smart contracts from their crypto wallets. And I know for one thing, I hate going to the bank. So many forms, so many things to fill out, and this is definitely a better experience. It has a flexible user experience. If you don't like the interface of a certain dApp, no problem. You can use a third-party interface or build your own. Smart contracts are like an open API that anyone can build an app for. It's interoperable. New DeFi applications can be built or composed by combining other DeFi products like Legos. Examples include stablecoins, decentralized exchanges, and prediction markets. They can all be combined to form entirely new products. So now, with the explanation of DeFi out of the way, what else could cause Ethereum to surge and rally? How about Ethereum 2.0, teased for several years? Ethereum's upgrade from proof of work to proof of stake protocol may be what is needed for the number 2 market cap coin to increase in value. The process of staking involves locking up an amount of a given cryptocurrency in a wallet to participate in the operation of a blockchain in return for rewards. And that's huge for the future price of Ethereum because both DeFi and proof of stake would lock up Ethereum that wouldn't get traded on exchanges. This would theoretically cause scarcity of Ethereum. Now, this would basically mean that with the same demand or even more demand, the price of Ethereum would see a huge rise. The implementation is due to start in the summer this year and will most likely run for another year or two until all 3 phases are complete. Although it's slated for this summer, we're more than likely to see another delay. In an interview just last month, Ben Eddington of Tiku, an ETH 2.0 client operator, told Decrypt that the upgrade could be deployed as soon as July. But Vitalik Buterin, the Ethereum founder, also said it should be out in July, but then later on said he misheard the question and would not guarantee a summer release, so I still expect another delay. Now, despite the delays, data from Arcane Research and Nansen AI shows that Ethereum wallets with at least 32 ETH, the amount required for ETH 2.0 staking, have grown by 13% to a total of 120,000 Ethereum wallets ready this year. Staking on Ethereum 2.0 will be fairly straightforward. There will be a minimum threshold of 32 ETH required to participate in staking, and validators will need to be running a validator node. As mentioned previously, this doesn't mean you have to go buy a bunch of specialized equipment to run a node. This can be done on a consumer-grade computer or laptop. However, validators will be expected to be online consistently or face minor penalties. The rate of return for staking ETH is expected to be around 4 to 10%. A program called slashing will apply to any validator acting maliciously toward the network by taking a portion of the validator's stake. Osho Jha, an investor, data scientist, and tech company executive, says Ethereum 2.0 would make the cryptocurrency become a functional store of value. There's a fixed issuance of new ETH annually. As the money supply grows, that fixed issuance becomes a smaller portion of the total money supply. As with BTC halvings, ETH over time has reduced the block reward for miners. The transition to Ethereum's 2.0 staking mechanism is set to reduce the inflation rate of ETH to between 0.5% and 2%, putting it in the same company as BTC and gold in terms of supply inflation. He also added, "I look at ETH as the fiat to BTC's gold. Despite negative connotations in the crypto community, fiat currencies aren't inherently bad, and the main advantage of an unfixed total supply is flexibility to adjust supply during different economic climates. Central banks have taken this flexibility to an extreme in recent years, and while ETH supply is not fixed, is projected long-term inflation may be a happy middle ground between fixed supply and unbridled money printing. Now, besides DeFi and staking, Ethereum has also the partnerships between industry players in the infamous Etherium Alliance, which consists of over 100 companies that are looking to make everything happen at a quicker pace. The scale at which Ethereum is operating is absolutely huge. Honestly, there were times during 2018 and 2019 when I thought Ethereum was going to take a massive step back. The tech many of its competitors, such as Tron and EOS, have now is impressive, and I thought they would be able to make a dent into Ethereum's market share. But so far in 2020, it's proving that these competitors are going to have to do much more in order to catch up to Ethereum, because as of right now, it's running away from the pack, and I'm not sure anything can catch it. Ethereum may be the greatest investment in history and will mint millionaires. It's done it before, and I believe it's going to do it again. And I don't think it's too late to jump on the train. Choo choo. But now it's your turn. Are you bullish on Ethereum, or do you think it will never see all-time highs again? Drop those comments down below. I hope you enjoyed this video. If you did, please make sure to smash the like button and hit subscribe to become a member of the Bit Squad. Thank you so much for watching. Have a blessed day. BitBoy out.